Welcome back. You're watching Maket Fatafat right here on ET Now show, where we get you all the stocks that are buzzing based on news flow as well as on technicals. And talking about technicals, now we have Dhwani Patel joining us on the show. Very good afternoon to you, Dhwani. And just before we hit the break, we actually told our viewers about the big ET Now exclusive story where Hindujas may have got the final approval from RBI to increase stake in IndusInd Bank, and on the back of that, we saw a sharp up move come in the counter, 3.5% uptick coming in for that particular stock. But Dhwani, this one is also on your radar, so tell our viewers technically where you see IndusInd Bank headed from here on.
The news that is backed the entire technical move is also coming into play over here. The entire structure of the stock has moved on the bullish side, and we are continuing in the uptrend that is already there in the stock. From current levels, one can go long on this particular one above 1340 level. We will see further up moves coming in on this particular counter. 1400 is a target that one should look up at this particular counter in the short term over here. Over here, a stop loss is mandatory, where we will put 1290 as a stop loss.
On to the next one, and that is a Delhivery. And Harsh, I believe this one is also in focus on the back of a block deal.
Well, yes, absolutely, Vinny. So we saw Carlyle exit Delhivery, nearly fully yesterday. So 2.5% odd stake is what Carlyle held in Delhivery. 5% as of September 2022, when they sold around 2.5 odd percent. Now they've gone ahead and sold out entirely from Delhivery. But despite that large volume of shares, they've been lapped up quite easily and quickly. We've had the likes of Norges Bank, Societe Generale, BNP Paribas, and the likes really pick up a good stakes in Delhivery. And on the back of that, Delhivery is in focus, and rather was in focus yesterday, and continues to be in focus on the back of that Carlyle exit. The stock, of course, down 1.3% on the back of that, but we've had good institutional interest coming in on the counter.
All right, so that is Delhivery for you. That is in focus on back of that block deal. But let's talk about another counter that seems to be in focus day after day, and that definitely is Aether Industries. Shesha, coming to you, why is Aether in focus today?
Some update has come in with respect to their fundraising plans, and as you mentioned, yes, it has been in focus for the last many trading sessions. In fact, in the last 5 days alone, the stock has run up nearly 10%, considering today's move, and in the last 1 month, the stock has risen nearly 26%. Yesterday, the company informed the exchanges that they will be raising about 750 crore rupees by allocating 80 lakh equity shares at the price of 936 rupees per share, indicating a discount of about 5% to their predetermined floor price. And SBI Mutual Fund, Axis Mutual Fund and Edelweiss Mutual Fund are some of the allottees. So on the back of this private placement being done for raising funds to the tune of 750 crore rupees, the stock is in focus. As I mentioned, it has run up quite a bit, and hence today it is taking a breather. As we speak, it is down over 2%.
Let's move on to stock number 19 for today, and that is Easy Trip Planners that we're going to talk about. And yes, again, it's on the back of a block deal that has happened today. We don't have the names of the buyers and the sellers, but what happened is that there's a 3.6% change of equity hands that has happened. So
and this particular block deal was not
something
known.
that everyone on our street was anticipating or expecting. So yes, and we saw a fall coming in the stock when the block deal came in as well. And look at it at 9:15 around, we saw the drop coming in over there. Yes, recovered from that absolute lowest point, but as of now also trading with a decline of 0.7%. Obviously, we'll be waiting for the name buyers and the sellers that will be coming in, and it will be interesting to see who the seller is as well. It was around 62.6 million lakh share of million shares of change hands that has happened. So keep an eye out on that one. And Easy Trip is down and trades 0.7% as of now.
All right, another stock that we will keep on our radar even on Monday, because by then we will have the name of the buyers and the sellers of this particular block deal. But Dixon Tech, Dhwani, how are the charts looking for this particular counter? Where do you see it headed from here on? Because if you've seen this, Dixon Tech, there has been quite a lot of momentum coming in that counter.
Right now is that we've been definitely seeing an uptrend in this stock, but in the past few sessions we've seen some profit booking coming in on this particular counter where we slipped in on from the highs of 4,730 to currently trading at 4,330. But this is the right time if one wants to get in again on this bullish rally, because on short term, on the 30 minutes, we are seeing some reversal kicking in this particular one. Overall, the indicators are also suggestive where the RSI is giving a positive crossover on a 30-minute chart. In the past 30 minutes, we are also seeing some support coming in at 4330 levels. So from current levels, one can go long into this particular counter. It's a buy on dips category that comes in. The stop loss over here comes at 4270, and a target again, will be approaching the swing highs of 473.
All right, so that's the view coming in on Dixon Tech. Let's put the spotlight now on the entire cement pack. And Vinny, if you see, most of the cement counters are actually suffering huge cuts in today's trading session. You have JP Morgan that has come out with a note on the cement stocks where they're saying they remain cautious on the entire sector as a whole. They're saying that they are seeing the risk reward as increasingly unattractive for the sector on a 3 to 6 month basis. They're saying the gas and the coal prices likely having bottomed out. They do not dispute the strong medium-term industry demand, however, but they're saying the valuation has hit about plus 1 SD on 1 year forward. They're saying 1 year forward EV to EBITDA, and also they're saying historically the stocks have not sustained at these valuations. So that's the word coming in. You have JP Morgan striking a very cautious tone for the cement counters, and you can see it on your screen. All of them are under immense pressure. Apart from that, you also have India's cement that's in focus because one of the brokerages have initiated a coverage on the counter with a sell rating as well. So that's also impacting India cements in today's trading session.
Okay, surely keeping an eye out on the whole cement pack. As of now, that clear pressure is surely seen on all the cement names that has been continuing as of now. But moving on to the next one that we're going to talk about, and that is PNB Housing. Now, there's a news flow that is coming in terms of the fundraise actually. Harsh, so what is that amount that they have raised? Any indication in where it will be used as well?
Well, yes. So, of course, it's going to be used for lending, Vinny. But 5,000 crore is a large amount given PNB's book size, and so a large amount in terms of a fundraise coming through. That's definitely a positive. Why the stock is probably trending in the negative is because there's also news at the Economic Times where they've suggested that there are plans that PNB Housing will be resuming its lending to the construction finance sector. Now that could be a bit of a negative coming through for the counter, because we know that in the past construction finance has been a sector which has faced large problems, and PNB Housing has, or rather this particular sector has dragged PNB Housing in the past in terms of performance as well as balance sheet. So them resuming lending in this particular space could come as, or is coming in as, a bit of a negative despite that 5,000 crore fundraise.
That's the take coming in on PNB Housing. Let's mark the flash on the bottom of the screen. Landmark Cars, we knew the block deal has happened, and the company is saying that the founder group sold about 5.6 lakh shares of the company, and the reason for selling the shares is for charity and personal reasons. So Landmark Cars has come out, and that's one of the stocks that you had picked up. But Ashesha, we already heard the technical take on HCL Tech, but let's talk about HCL Tech on the fundamentals today. Despite the rest of the IT pack being under pressure, you have HCL Tech that is bucking the trend. It is in the positive territory. Tell us why is that?
Nifty IT stock which is trading with gains today, and that is because strong commentary has come in from the management. Jefferies in fact met with the management of HCL Tech. On the back of that, they've come out with a note where they say that they see structural growth opportunities in the next 5 years and expect to generate double-digit growth in the next 5 years. They've reiterated their FY24 guidance where they say that they expect to grow at 6 to 8% in constant currency terms. As far as EBIT margins are concerned, they continue to target returning to pre-COVID EBIT margins of 19 to 20%. But for FY24, they've reiterated their EBIT margin guidance of 18 to 19%. As far as AI adoption is concerned, they see AI adoption as an opportunity. but they believe that widespread enterprise adoption is 12 to 18 months away from here on. They want to be the fastest growing company in the IT space as far as organic growth opportunity is concerned, and they say that they will continue to return 75% of their net income to investors. The strong commentary that has come in from the management, they reiterated their FY24 guidance, strong outlook for the coming 3 to 5 years, and that is the reason the stock is holding up in green today.
Okay, surely that is the reason why HCL Tech is holding up in green as well on the back of a brokerage note. Let's move on and talk about Piramal Enterprises on the charts then, Dhwani, because this one, when you look at it from the lows in the month of March, it was around those 600 levels. We've seen a bit of a recovery coming in, obviously gone up to those 880, 890 levels like we can see, but today that stock has fallen off, down 4%. At 888 currently, is it an attractive buy?
Absolutely not. And this, what I'm seeing over here chartically is that the downward fall should continue in this particular one. So we are, expecting a short side trade over here. The stop loss over there comes at 913, and the target over here that has to be played out is 830. So till 830, we are definitely seeing some, selling coming in on this particular counter from the current.
Alright, let's shift focus. Let's talk about a new age tech company which has seen a stellar recovery, and that is Paytm. You have BofA that's come out with a note on Paytm where they're giving a thumbs up. They're maintaining their buy stance on the particular counter. They've gone ahead and hiked their target price as well. They've set a target of around 1,020 rupees per share from 885 rupees per share. They are expecting Paytm's margin improvement to happen at a faster pace than earlier expected. They are also saying momentum in the high margin lending and soundbox business to remain good for at least next 3 to 4 quarters. They're saying the key risk is higher than expected competition from peers like PhonePe or Reliance Jio's financial services. But overall, they continue to maintain a buy stance on Paytm with a target which they've hiked, and it is now above 1,000 rupees per share target.
Okay. Keeping an eye out on Paytm as of now, but let's move on and talk about another stock, and that is MapmyIndia, or CE Infosystems as we know it as. And at this stock, Dhwani, this is a very rare stock that I've seen coming in from the technical side. So I'm very interested in what is making it so attractive. You know, we have seen some momentum pick up in this stock. Where do you see this headed? Is this a buy call at the current price, or what is your view?
Yes, absolutely. That's a buy call coming in on this particular counter. What we are seeing is that the stock had given a structure reversal, and in today's session, we have a volume back move that's putting it on the technical counter as well right now for me. We are seeing that the stock is coming out of its downward trajectory and it's moving upwards. We are getting a breakout over here, and 200 period exponential moving average is working fabulous on this particular chart, where we are seeing the stock taking a constant support on those levels, which puts it on the buy radar for the further up move. From current levels, one can go long into it. The stop loss comes at 1160, and the target one should be looking up over here is 1400. It's a positional buy which can be held on for like 3 to 6 months.
Positional buy for 3 to 6 months. 1400 is what we are keeping an eye out on for MapmyIndia. Let's move on and talk about a pharma name, and we're going to talk about Aurobindo Pharma. We've seen a sharp uptick coming in the stock. It's up as much as 4%, 3-4% as of now, like you can see on your screens as well. And why that run-up has come in the stock today is mainly that one of its subsidiaries has actually entered into a sub-licensing pact, and which is with medicines for patent pool of nilotinib B capsules. Now, Aurobindo Pharma said its wholly owned subsidiary has entered into this voluntary sub-licensing to develop this tablet and capsule in the markets originally developed by Novartis and for the treatment of chronic myeloid leukemia and in 44 low and middle income countries. These include 7 countries where patents on the drug are pending or in force as well. So on the back of this, we're keeping an eye out on Aurobindo Pharma as of now, trading almost at the day's highest point, touching and almost near those 700 levels for Aurobindo Pharma.
Alright, that is Aurobindo Pharma for you. It was Lupin 2 days ago. Today is Aurobindo Pharma that is buzzing on base of this particular news. But Harsh, coming to you, IDFC First Bank and Kotak Mahindra Bank, both of these banks are on your radar, and why is that?
Well, yes, in fact, Cheryl, the entire banking pack ought to be in focus today. What we're seeing is that Q1 FY24 credit growth is expected to come in extremely strong. So Investec has come out with a note. 3.2% sequential growth is what they're penciling in for Q1 of FY24. Mind you, Q4 of FY23 also ended on a very, very strong note. We saw solid growth across banks, 18%, 20%, 25, 27. We saw some banks clock 30+% as well, especially the smaller ones. And on the back of that, to continue to expect credit growth to sustain was not something that is expected, and definitely not in Q1 of the financial year, which is seasonally weak in any case. So seeing that number sustain is quite strong for most banking sectors. What we're also seeing is that the 3.2% projected by Investec is the highest in the last decade in Q1 of any year, any financial year over the last decade. So that's the other positive at least metric that we wish to put out. But on the back of that, it's expected to be a strong quarter, Q1 FY24, and banks will be in focus.
All right, so that is banks, why they are in focus in today's trading session. But the next stock that is in focus is Gillette India, Vinny. And that particular counter at one point in time, last time I checked, it was up about 5% or so. There you go. It is around those levels, 4.7% uptick coming in for Gillette India. And why is this particular counter seeing the sharpest intraday percentage gain since August 2022 is because you have a brokerage note which is saying, and that is from Nirmal Bang, saying that the growth in female grooming products and entry into electric shaving products and potential premiumization in toothbrushes can transform the company's growth prospects. They're saying that the channel checks and customer surveys indicate the healthy traction and brand recall in female grooming sub-segment for Gillette, and therefore they are maintaining a buy stand, hike the target price from 5,380 rupees per share to 5,550 rupees per share. So yes, a thumbs up coming in from Nirmal Bang, a target price hike, and it is much above the current market price. Right now the stock is around 4,800 rupees per share, but the target set is 5,550 rupees per share.
Okay, let's move on and talk about BPCL then. And Ashesha, why is BPCL in focus today? The stock is actually tanking in trade when I'm looking at it right now. What is the reason behind this, and what are you watching out for?
Well, yes, the stock is under pressure today. It, in fact, yesterday informed the exchanges that the board will be considering rights issue in the meeting that is scheduled to happen on 28th of June. It will most probably be used for capex and for deleveraging, but this is being taken negatively by the street, and that is because the street is wondering as to why the company is raising funds at a time when the earnings environment is very strong. So negative sentiment with respect to fundraising plans of the company via rights issue, and that is the reason the stock is tanking in trade today. In fact, as I mentioned, as I talk about it, the stock is at the lowest point of the day, down over 3.5% as we speak.
Okay, keeping an eye out on BPCL down and trading almost near the day's lowest point as of now. Let's move on and talk about UPL. We have an update that has come in from UPL just this afternoon in terms of some restructuring that is happening. Now, what has happened is they've approved transfer of specialty chemicals business, and this is on a slump sale basis. The transfer is going to be to UPL Specialty Chemicals Limited, which is a wholly owned subsidiary. Consideration for that is going to be at 3,572 crore rupees. This will potentially help in terms of unlock shareholder values for the specialty chemical business, and the process is envisaged that it will be completed in the next 3 to 4 months. So let's keep an eye out on UPL. As of now, trading with cuts of almost 0.9%, almost reaching 1% in terms of the cuts over the share.
All right, moving on. That's UPL for you. But Dhwani, Grasim, where you see this one headed? We've seen all the cement counters be under pressure in today's trading session, and Grasim is no less. If you see, the stock is down about 1.8% or so. Where do you see Grasim headed from here on? Technically, is this one looking a safer spot to be invested in?
Currently, we are seeing the overall pressure that's coming on the cement pack that continues to stay over here in Grasim as well. What makes it on the technical chart right now is that it is crossing below its 50-period exponential moving average, and we are moving down towards its 2-period exponential moving average. So the fall will continue in this particular counter. The fall that we see over here comes down at 1680 level. So 1680 is a level that one has to look out for over here on the downside. A stop loss over here can ideally be maintained at 1735 and can be shorted from the current.
Okay, keep an eye out on Grasim and those levels over there. Let's move on and talk about Carborundum Universal. Yes, this news flow had come in yesterday, but that pressure has continued on the stock, and that is that, they have appointed Sridharan Ragarajan as the Director of Finance.
Rangarajan, maybe.
Rangarajan. Sorry, I beg your pardon. Rangarajan as the Director of Finance and Strategy as the Managing Director of the company. And this is going to be with effect from 3rd of August. Now, this is going to be for a period of 5 years. Now, he is going to be succeeding the current director. Mainly, this reason for the fall is that, Mr. Rangarajan was actually had joined Carborundum Universal in June 2011 as the CFO of the company. Normally, they've had the managing directors or mainly CTOs or CEOs in the past who were similar levels. But as of now, because he's a CFO of the company, there's a bit of a concern on that front. And that is why there's a slight bit of a pressure that we're seeing coming in on the stock.
All right, let's shift focus and let's talk about Tata Motors then. And that particular counter has been a hit with most of the technical analysts. Also, fundamentally, also the stock has been doing extremely well. But Dhwani, why is this featuring in your list? Do you see further scope of upside, or you think now Tata Motors will just take a breather and take it easy?
That really got it. That is going to take a breather from current levels, and that is why it's on technical radar right now. That the stock in today's session has tanked below its earlier support zone. So we will look at some sell-off coming in this particular counter. So a word of caution out there to the people who have already invested into it. It's time to book your profits and move out of this particular counter right now. We will see a dip coming in over here in this particular counter till 523 levels. So look out for those levels for next buying opportunities. But on current level, it's book your profits in this particular one.
The profits is the word coming in from Dhwani, saying that yes, the stock is likely to take a breather from those elevated levels. But let's shift focus. Let's talk about Prince Pipes, and why is that particular counter in focus is because they have actually unveiled a bathware range. The company has launched a new collection of luxury faucets as well as sanitary ware, and they've launched a total 9 ranges in the faucet. Also, they've gone ahead and targeting a lower market segment. As of now, the products will be completely outsourced from Morbi, Gujarat, and the bathware product baskets included overhead showers, hand showers, and health faucets as well. You have a lot of notes that have come in on that particular counter. They're saying that this vertical is headed by Harsh Kumar, who is the senior DGM and expert in the bathware segment with experience of over 22 years. Also, they said that the company is, as per the company, the current market size of the bathware segment in India is approximately 15,000 crore rupees with organized share at around 65%. So that's one of the reasons why you have Prince Pipes that is in focus, the fact that they have unveiled a bathware range, but the stock is under pressure in today's trading session.
Okay, let's move on and talk about some of the chemical names. You have Aether Industries, Deepak Nitrite. These stocks have been in focus, and the main reason is, the commentary we saw coming in from these players in Q4 was that, and it was in line with what the global players had indicated, that there was a bit of a subduedness in terms of the demand coming in over there. But now, and maybe they also pointed out a bit of a weakness that we could see coming in Q1 FY24. Now, and a subsequent recovery after Q1 FY24. Now, what global players have started highlighting is that maybe the second half of this 2023 year is something that is June to December. Also, we could see that weakness continue. So just that is going to be much beyond that Q1 number which we had highlighted, and all the chemical players had highlighted as well. So in this indication, they believe that the demand revival is likely to be only post FY24. So that's after this whole financial year. And obviously, moreover, the fiscal would be a washout for the chemical industry. And because of, the commentary that is coming from global chemical players, that they are indicating a bit of a weakness, we are seeing that weakness coming in the stocks of our chemical players as well. Aether Industries, Deepak Nitrite, seeing clear pressure there, and down almost 4% is Aether Industries. Deepak Nitrite down almost 1.5%.
All right, moving on then, let's talk about Bajaj Auto, Ashesha, and why is this particular counter in focus in today's trading session?
JP Morgan report is what stock is reacting to. They've maintained their buy stance on the stock, but they've hiked their target price from 5,380 rupees. They've hiked it marginally to 5,400 rupees per share. They say it is one of their preferred bets from the auto space. Likely bottoming of two-wheeler and three-wheeler exports, increase in EV volumes is what makes them bullish on this particular counter. Launch of Bajaj Triumph is one of the important catalysts that we need to watch out for come next week. It will probably open up a huge addressable market share is what JP Morgan is betting on. So for now, they're maintaining their buy stance, but they've hiked their target price, and that is the reason the stock is buzzing in trade today.
Alright, so that is Bajaj Auto for you. 37 stocks is what we've covered in today's edition of Market Fatafat, but that was indeed the last stock. Thank you so much, Dhwani, as well as Harsh and Ashesha.
And Swati.
And Swati for joining us on the show and taking up views to all the stocks that are buzzing in trade. With that, we come to the end of this week's edition of Market Fatafat as well. So on behalf of Vinny, our producer Snehi and Trevor, thank you so much for watching. See you next week.